You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time for Volatility Views, the program that brings the week of volatility to a crashing close here as we break it all down here. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network. You guys know how to get us. We are streaming it live right now, noon Central, 1 p.m. Eastern on Friday, November 9th here. So if you want to get the live version instantly in your ear holes, Mixlr is the place to do that. If you want to just get the old podcast, you can get it on all your usual platforms. Subscribe on the Mixlrs or, well, not Mixlr. Mixlr is live. Subscribe on the iTunes, or I like Pocket Cast, but to each their own. Whatever platform you like, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys, and go vote in our polls too. It's always good to get your pulse on what's going on out there, and we're doing that quite literally this week. All right, and joining me on the old program today, we got the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the show, sir.
Good to be here. Good to see you.
Are you seeing me?
It's nice to know that I'm one of the people reshaping the volatility landscape. You know, that's really important to me.
It is.
And
it is. You are truly reshaping
I'm
it.
able to provide that service to the world.
At the very least, you are reshaping the downside skew of VXX, if nothing else. And that, at least, we can doff our cap to you for doing that there, sir, as well. All right. Let's do it. Let's dive into it. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we review the week that was and indeed still is, from a vol trading and trending and analysis and unusual activity, all of the above perspectives here. And as we're recording this and streaming it live a little bit past noon here in the one true time zone, the central time zone here. Earlier this week, it was Volmageddon, VIX-ocalypse, call it what you will. They came for that vol, and they came for it oh so hard, oh so aggressively. We've been talking for a while on this show in particular about, what was doing it? What was keeping those VIX futures backwards? What was keeping that bid out there in the vol space. Was it earnings season? Turns out, not really. Was it non-farms? No, not really. Was it kind of broad macro weirdness, which is a broad category in and of itself? Maybe a little bit, but not really. Turns out everyone who said the midterms, you're pretty much right, because we had, of course, our big midterm elections here in the U.S. this week, and that vol came crashing in so aggressively pretty much immediately afterward. In fact, our prognostications for this week not looking so bad. Let's do a quick peek at last round. I'm looking pretty good. Mr. Meatball, we're kind of actually equidistant right now, which is kind of funny. VIX Cash right around almost exactly at 17.5. I'm at 18.35, which I revised myself up at the last minute. I was thinking going to keep it at 18.15. I bumped it up to 18.35. If I hadn't done that, it would have been so beautiful. But still, I'm about eight tenths of a handle off. Mr. Meatball, pretty much exactly a handle off at 16.5. He was feeling the downside. But today, vol getting a little bit of a lift, which is bringing me back in line. But still, I don't know if you know this, Mark. Pretty much vol is dead now, right? After midterms, vol is gone. Vol is dead. We are on VIX death watch through the holiday season and beyond. Do you concur, sir?
I do. It's over. There is no reason to hedge ever again. And all is well in the world. Man, if we did this show on Thursdays, I would have almost hit the nail on the head.
Yeah, it was looking pretty. How low?
Darn good.
How low do we get there out there in the cash?
I think we actually got to 1640.
So yeah, you did flirt with it. Your strangle would have looked a little bit better this week. Your 15.25 strangle, if you took it off judiciously.
Yes, correct. But all told, for being down to call it 1.25%, we have almost no interest in volatility premium and risk. All is well. Nobody seems to be scared. That would be the lesson of the day. The lesson of the day so far is nobody really cares. So
that's it. We're done. That's it for Volatility Views, listeners. We'll see you next week. No one cares.
Yep, there goes. Vol's over.
I know Andrew had been preaching the midterms are kind of holding it up. I know you were a little skeptical on that. Were you surprised at how kind of aggressively they came for it post midterms this week?
Yeah, I got to say I was a little shocked that they came for it the way they did.
What were you looking for? What were you expecting, sir?
I actually had thought, once we kind of cleaned up earnings season, things would get a lot easier, but they did not. That was not the issue. Apparently, it was let's all worried about Donald Trump and the elections. I guess they really were more nervous about the Senate flipping and having complete fear, a completely deadlocked Congress versus president situation where nothing gets done. I guess that was the issue.
Yeah, I was down at that STA conference in D.C. a few weeks ago, and whenever you're in D.C., the political analysts always come out of the woodwork. And a lot of them were prognosticating, actually, that there had been well over $1 billion spent on Senate races so far in the U.S. at that point, probably much more now. And it was a very real possibility that it could pretty much be like not much change in the Senate. And that's pretty much what we saw out there. So you're right, all that consternation out there in terms of, who would take control of that august body? Would it change hands? So much, not so much, at least here going on to the show. So yeah, like we said, VIX Cash right now at about a 17.5, 17.75, flipping around that range. So it's almost 3 handles lower than we were this time last week, about 2 3/4 handles. Our old friend VVIX, aka the volatility of VIX, pretty much unched from last show. We were flirting around 100, about a 99 last show. We were at about exactly 100 this show, which is not surprising. VIX has been moving. I know people, we talk about it all the time. People are always biased to the downside. If it's not downside, it's not really vol, but it is. It moves. When volatility moves, it moves. It all factors in to the old VVIX, and that's pretty much what we're seeing out there right now. And if you were out there, if you were saying to us, and I know a lot of you were, just I see all your feedback. So a lot of you were saying, oh man, when's this backwardation going to end? When's this going to die? When are we going to go back to a nice old normal contango out here in the VIX futures land? Well, you got your wish this week. You got it pretty aggressively. They're no longer backward. They're pretty close here right now. The cash is flipping around a little bit, as it is wont to do. But right now, it's close. It could be close to even, almost. Not quite backward. But it looks like about a 0.2 of a point premium out there to the no future to the cash. And you're talking almost even, actually, for the D's future, which is kind of interesting. So, yeah, the cash, the whims of the cash make all that kind of crazy. But, yeah, pretty much all that backward. Remember, we were talking several handles there for a while there in terms of premium in the front into the cash to the other contracts. So not quite seeing that out there for the rest of this week. Mr. Meatball, is this do you think we're I mean, I was joking before about VIX Death Watch, but I mean, I'm hard pressed to think of a lot of scenarios that get us aggressively backward really quick, unless, of course, the sell-off machine kicks back in. Is that pretty much it? You think that could really get us back into backward land? Is an aggressive, sharp end to the bull here? That's about it? No other real, or I guess unless the Fed gets into crazy town, maybe that's the other thing.
I think you're going to need a lot of stuff to make things happen. It just feels like the market is not looking for that kind of major sell-off. The market's just saying, we got had a really nice run. Now we're going to kind of retest. We're kind of sitting at the 200-day moving average. I'm thinking maybe we kiss that, and then we'll see. But if you look at vol futures and volatility, they're not catching a big bid or anything like that. They're not acting like they're, expecting a sharp sell-off. Feels like we may not get much.
What has been, obviously, your fund is primarily predicated around vol trading. There's been a lot of vol to trade this week. What's been catching your eye? What's been lighting up the Carmen line tape this week?
Vol had been so overbid leading into the election that we kind of set up for the market to maybe kind of ease off its vol bid, and that kind of worked. And then on our the hedged equity fund, we were out of our hedge right around Friday, and then put on a kind of just a what if worst case scenario type hedge in our other in lieu of having a huge hedge. So we were kind of out last Friday, and it was about the right time. Maybe so. Because vol has not really been able to catch a bid since.
You didn't do any aggressive fading coming into this week, maybe?
No, not. We did some fading Monday ahead of the election, but we had kind of spent the last few weeks kind of building that up. You don't just go all in one day. Generally speaking, when you're building a short vol position, in order to kind of not lose your shirt, you're probably doing some long vol against it. And then you're hopefully going to be, kind of taking advantage both ways. Getting. I
prefer to do it all 2:55 p.m. Central on Monday. That's when I get it all.
Yeah, right
all
before
one click of a button.
Right
I'm done.
Tuesday during the elections.
Yes, while the exit polls are hitting. That's when I'm putting my trades. That's when it's all lighting it up out there.
Exactly.
Yeah, but certainly not quite the perhaps shocking outcome this time, at least, that we saw 2 years ago. I still remember doing that live show. What a different world it seems like 2 years ago, doing that live show with Russell during the elections, as he and I were both saying, "Wow, it looks like Trump may actually be winning this thing." In contrary to every single poll on the planet. I remember I remember the moment we were doing the show. We actually brought him back, and we did a second kind of live follow-up because it was so shocking. And the second he took Ohio, I think there was just silence on the show for a minute. We just said, wow, this is real. This is actually happening. This is crazy.
Yeah.
That was a crazy – just the notion of even being able to do that show live. Obviously now Russell's not even at Cboe anymore, so we couldn't do that show anymore. But the notion of Cboe coming on to discuss a live volatility event, given their current legal finaglings over there, that just seems like such a distant memory. But how fun it was. Maybe we'll put that back up again for a fun reminder here in like a best of for the feed or something like one of these days. Because that was a fun show.
Great best of, yeah.
Maybe we should do more of those kind of live vol events.
Yeah, because I can remember that morning. I was, we were down, but not anywhere near what we looked like the night before, and we ended up just getting, having a bit of a sell-off, but it was not the end of the world. And that was it.
Yeah, it was just one of those. It was such a, and of course, and the immediate response in the after hours was just all hell had broken loose. Everything was off. Everyone kept quoting the Dow, which is of course the big point one. It was off about 1,000 points, but that's neither here nor there. Of course, saner heads prevailed immediately afterwards. We all know how it played out, but yeah, what a fascinating time. I want to go listen to that show myself again and just hear it play out to ourselves, hear it in our voices as we're all like, wow, this is not the outcome that anyone predicted by a long shot, and yet here we are seeing it play out in front of our eyes. Speaking of things playing out in front of our eyes, VIX options trading it up a pretty decent amount here today. We're seeing close to 500,000 contracts on the tape already here, a little bit past noon Central Time. Looks like today about not quite 2-to-1 calls over puts, about 300,000 calls and about 171,000 puts on the tape. The ADV right now is about 618,000, so still pretty strong, up about almost 10,000 from this time last week. So it's been a rock'em sock'em robots time. We talked on Monday's option block, of course, about how much volume we saw out here in October and just across the board. The futures have also been lighting it up. VIX futures is one of the few, last month, October is one of the few bright spots for the entire year, or I should say post-February, really. VIX futures have kind of been in a death knell, another death watch out there for VIX futures. But they had a good month on October, so we'll see if it could continue here apace. I'm guessing post-elections that'll kind of calm down, but you never know. You never know in the vol space, which makes this show so fascinating. Getting on out here to what's been lighting it up out here, the top 10 hot VIX positions, the big spots where everyone's playing out here in VIX land. Our top 10 hot VIX options, strikes, positions, call them what you will. We'll just call it our VIX top 10 here. Let's go bottom to top. I don't know, Mr. Meatball, what do you like better, top to bottom or bottom to top? I'll let you pick this week.
I'm more of a top to bottom guy.
Okay, but, fine. We'll go traditional.
Yeah,
actually, it is a good place to start on the top this time because we're starting with the put. When's the last time we started with the put in our top 10 in the VIX, Mr. Meatball?
That's interesting.
It's been a long time. I'll have to go back and check the archives to see exactly when it has been, but it has been quite some time, listeners, since a put has led the dance here in VIX land. That's exactly what we see here this week. Number one with the bullet, the Nove 15 puts on the tape for nearly 278,000 contracts, over 250,000 open out there. Number two, we got the Dees, our old friends, the Dees 37 halves, about 230,000 open to those. Number three, a second put here on the list. It's a bit of a put palooza here this week, if I do say so myself. Number three is, the Nove 17 puts, about 230,000 open there. Number four, Nove 20s, about 210,000 contracts there. Number five, our old friend 30 strike, this time in Nove 30s, 206,000 contracts. Number six, our second put on our top 10 here, the Nove 14 puts, I should say third puts. Third put. So if you're paying attention, number one was the Nove 15s, 277,000. Number three was the Nove 17 puts with 230,000. And number six now are the Nove 14 puts with 197,000. So puts dominating the tape. Go figure, given this week's action out here in volatility space. We're seeing puts lighting it up. That alone is indicative of what's been happening in the vol space over the past week. Number seven, the Nove 26s, 192,000. Number eight, our four puts. 40% of the top 10 are puts this week. I can't remember the last time we had that many. Nove 16 puts with 184,000. That's a nice little put strip there. 17, 16, 15, 14, all the way down. 184,000 of the Nove 16 puts. Number nine, our old friends, the other friends, the Feb 37 halves, 174,000. Rounding out our top 10 here this week, listeners, the Dees 20s, 168,000, total of about 9.4 million contracts open. Getting a little bit heavier again out there in the OI, which is interesting. About 6.3 million on the calls and about 3.1 million on the puts. Mr. Meatball, 40% of the top 10 coming in puts this week. Does that surprise you, sir?
Well, I think it's indicative of what the market is kind of the money is anticipating out of out of what's going on, right? The market is clearly the big money, the VIX and volatility money, is betting that there is potential for a real tank job in VIX.
I like that, the vol tank job. That sounds like a movie. That sounds like a heist movie. The VIX tank job. Someone's coming in to steal all the VIX futures and run them out of town here on the show. Well, a lot of things lighting it up. Actually, I mentioned today's pretty active as well. Big stuff going up here today. Mr. Meatball, did you see today? It looks like this. Looks like a Nove 1730. Could be risk reversal, maybe a strangle, and looks like maybe they're rolling it out to Dees 1530. They had put it up this morning. Looks like almost 42,800 times coming in for what is it? Nove 17 puts. About 43,000 times for a $1.17, which as usual is pretty much mid-market right off the bid. And the Nove 30 calls going up for 15 cents, exactly mid-market, about 43,000 times. Then we see the Dees 15 puts for 70 cents, pretty much exactly mid-market again, 43,000 times or so. And then the Dees 30 calls for 42 cents, pretty much a couple cents off the bid. So maybe a bit of a strangle roll as well, Mr. Meatball. What do you feel on this one?
Maybe. It kind of feels like that. We've seen just gobs of different kind of paper going up. Like this one, I don't know if we haven't gotten double X today, but there was a massive bear 1x2 that went up today. And it's amazing. We've seen like guys almost scalping these VIX moves all week on, as we were starting to on the highs, we were seeing guys basically long, on the low ends, they would try and buy some calls. And then anytime we got a bid, it was just a huge bid for puts. I mean, just put spreads, put 1x2s, big paper that went up, big Dees 1715, the Nove 1614 and a half, all over the place. I was kind of surprised, but pretty phenomenal stuff.
Yeah, it's been a lot of crazy stuff. We'll get to obviously our old friend VXX in a few minutes here because there has been some weird action. You're right out there as well. Looking a little bit more in VIX land here. Just even today, like I said, a lot of paper going up today. Today, one of the more active days of the week here, which is kind of interesting given what's going on out there. We said kind of responding somewhat anemic, but the volume out there is not anemic today. Also, D's upside, not forgotten out there. It's not all puts all the time. 10,000 of the D's 24 is going up on a sweep today for about 94 cents or so. So someone gobbling up some D's upside here. Also looks like some verticals going up. The Nove, that was about 10,000 of those. The Nove 2130 vertical going up for almost about 6,600. The number of the devil, 6666, extra 6 on there for extra evil, going up today for 24 cents. Paper buying that. So there is a lot of upside still going up, listeners. Also, still though, some put verticals here. 16, 17 put vertical also going up on in Nove doing that. Paper looks like paper doing that for about 50 odd cents or so. So it's not all ups, not all downside, not all upside, which is again kind of interesting out here in VIX land. But in the top 10, it has been kind of all puts all the time out there. Sir, Mr. Meatball, any you mentioned kind of VXX, we'll get to that in a minute. Any other shows, maybe any interesting trades you did this week out here in VIX options land that are worthy of note, sir?
Yeah, we did see more of these 1x2s and things like that go up. But like I said, I think the biggest trade I saw today was a buyer of the November 16-17 put spread. And they bought 30,000 of them. So always kind of fun. But that was what we saw today.
Yeah, VIX, I should say. Yeah, I should mention that 5,000 lot of put spreads. That was one of many. That was many blocks of 5,000 going up. So that 16, 17 vertical in the put spreads, getting a lot of love here today. So yeah, kind of pick your poison and express it out here in VIX land. That's what's kind of going on here. If you guys got some trades you're doing, interesting stuff you're seeing, hit us up. You guys have no shortage of opinions out here when it comes to volatility. So let us know out here. Let's move on to our old friend, some of your favorite, some of your least favorite out here. Either way, you all like to watch it. This is our old friend VXX. And what do we got out here this week? We've got, VXX about 33.75 or so. So not quite 4 handles below, but pretty close to where it was about 37.5 this time last week here on the show. It got down a lot lower, was flirting with the 30 handle ever so briefly, then kind of in rally back mode. I don't know, I think Rock Lobster was kind of a little bit surprised on yesterday's show, Mr. Meatball, that how much VXX was kind of regaining. Are you a little bit surprised as well? VXX, a little bit of resurgence out there. Is it surprising you its extent, or is it kind of what you expected?
What, that it's been able to, that it's getting more volume again?
No, not just volume, but like it kind of flirted. It was getting crushed. It was flirting with the 30 handle, then it kind of rallied right back up.
I'm not surprised. There are people that are kind of, you look at where VIX futures are, the initial move was something that, we obviously you could see, but once you get past a certain level, it becomes very difficult for, you need VIX to drop more for VXX to actually move, and then it starts to become very sensitive to little pops. So with the curve as flat as it is, and it's super flat, it is not very difficult for VXX to catch a bid.
That's kind of the fun thing and the weird thing about these products. And you're right, kind of thing people I think sometimes conflate about these products when they think, VIX is trending low or lower again, that things are going to settle down in VXX, and it's on its inevitable decline, its inevitable progression to the downside. But those are moments actually when it can move, which is a little bit, I think, surprising, counterintuitive to a lot of people.
Yeah, well, when the curve is this flat, VXX is a totally different animal. It is, it is going to, when there's not like a heavy contango, VXX is just going to be sensitive like a VIX. It's going to move like a 30-day future, and you're not going to see this kind of decay. And the normal decay traders are not willing to pile in on VXX until it gets a contango. Now, we maybe saw some people trying to front run the move, thinking that that VXX might get, might get a little bit of a bid, but you really need some follow through for the guys to really jump on board and go after VXX the way maybe traders were thinking they were going to get.
Yeah, we had this discussion many times on the show. I'll point you back to some of the old archive episode listeners where we've debated at length what causes the erosion and how VXX moves and looking at the VIX futures term structure, how all that plays in. But with that front portion, like you mentioned, kind of flat and kind of vacillating a little bit, funky things can happen out there in VXX land. You should be prepared for it. Perhaps like our friend here. We were talking last week, Mr. Meatball. In fact, I'll break down our top positions out here in VXX while we're at it as well, our top 10 here. And coming into this morning, Mr. Meatball, it was, our standard fare. The Jan 10 puts, Jan 15 puts, Jan 5 puts were all there in the top 5. But number 3 and number 5 had been usurped, talked about this last week, by this kind of size ratio put spread up there, the NOV 34-32 put spread. Actually, they had evened out by this point, because coming into this morning, they had about 77,000 open of the NOV 32 puts and almost 70,000 of the NOV 34 puts. Total of about 4 million contracts open out in VXX land right now, about 2.3 million on the put side and about 1.7 or so on the call side. So puts leading the dance as you would expect out there, but perhaps not quite as heavy as you'd think. But yeah, this put spread going up again, Mr. Meatball, today. Somebody's loving this old 1x2, the NOV 32 put spread going up. Looks like 25,000 by 50,000 times, so 75,000 contracts there. Looks like they're doing it for not quite 50 cents, about 48 cents or so out there. Interesting stuff. This is, you feel this is closing, Mr. Meatball, from last week's action, or you think they're taking their money and running, or maybe they're doubling down. They like the party so much they want to go twice.
Yeah, no, it was additive. They were buying. They were not closing it. So I was as surprised as you, but yeah, it was. They were buying it.
Interesting. You think they kind of hit it, take the money and run, right? But or maybe this resurgence in VXX last couple of days, maybe they missed their opportunity, and so they wanted to get back in there, put some more on. I guess while the putting on is not quite as good as it was, but better.
Yeah, I think they were actually the pricing was not as good, but I think they hedged a lot of what they'd done on the downside the first time, and then went and then kind of put this back on against some of their hedge. So it was a nice, I actually liked the trade. I think that I think they're going to be happy they did that.
Well, if they're doing two more of that 32 puts, they're putting a pretty sizable line in the sand there on that 32
Yeah,
strike.
they're basically saying we're not, 30 is about what we think is going to happen next week. But don't be surprised if there's, if there's somebody involved that, other positions underneath involved. A lot of these 1x2 guys are the same guys that were trying to do, different kinds of different kinds of just long put plays.
This guy hedging his short gamma here. That's the reason we bounced off the 30 handle, sir. If it wasn't for this guy, we'd be at like a 28 right now. You know it. It's this guy. It's all his fault. Him and Carmen line.
Exactly. It's all us.
But yeah, we talked about this a little bit last week. When I was like with you, when I first saw this print, I didn't have a chance to dig into it a little bit. I just assumed, okay, he's taking this off. Kind of, it worked his way. Go more power to you, sir. But yeah, it sounds like this is additive, which is also interesting in and of itself. I think maybe this recent move out here in the last session or so maybe took him by surprise, or maybe at the least he didn't have a chance to unwind everything he did. You're right, he probably scalped some stuff at a little bit lower level. There's always other wheels turning and spinning in different products on these things. We're only looking, obviously, at this one leg, listeners, so we don't know all the things that are working. But just purely from this positional standpoint, he obviously had an opportunity, perhaps, to unwind it at a more favorable levels, missed it, so decided, hey, in for a penny, let's go in for a few more pounds here with a lot more size out here in VXX land. Aside from that, Mr. Meatball, obviously that's kind of the big print that's kind of dominating the tape this week. But anything else catching your eye out there and everyone's favorite product to malign, sir?
Yeah, I think that, what we've seen is that over the last couple of weeks, the use case for VXX has been proven, right? If you need near-dated, quick, actionable hedging, guess what? You could have bought VXX for 26 and sold it at 40. And there was real opportunities to hedge yourself off and protect yourself over the last, leading into this whole mess. So I think that, as maligned as it is, it's not nearly. I think you have to ask yourself, is it really that bad?
Yeah, it is malign. But, we've often said in the near term, and I'm talking underlying now, obviously, in the short duration, in the near term, VXX is a fine product. As long as you're not setting it, forgetting it.
That's what it's supposed to do.
Exactly. Yeah, as long as you're not setting it and forgetting it for years in your IRA, that's proven to not work. But outside of those scenarios, if you have it over the last week, we had a listener, I think, write in talking about hedging his puts with some VXX underlying. We kind of debated that a little bit on the show last week. But yeah, in these near-term scenarios, looking to harvest that pop, VXX does what it's supposed to. As long as you're not around for the inevitable other side, the inevitable decay, you're good. That's why we always say, underlying-wise at least, keep it to a minimum in terms of length of duration. But yeah, over the last week or so when things are moving, it has had a decent run out here. I was just pulling something up, Mr. Meatball, and then, oh yes, here it is. I was looking at some other interesting prints. It looks like someone, Mr. Meatball, you're not the only one who was inspired by our 1x2 friend out here in VXX. Someone else looked at that, then decided, I'm not gonna be able to get it off on the 34-32 strike in Nove anymore because this guy has bid it all up. So he's going to go in between them. So someone put up today, looks like the Nove 31-33 put not quite 1x2, one by like 1.5 or so out here. The Nove, 31-33 doing 6,200, buying 6,200 of 33 puts, again, in VXX listeners, for $1.05, and then selling almost 10,000, 9,300 of the Nove 31 puts for 28 cents. So someone, clearly, Mr. Meatball, you're not the only one inspired by this guy. This guy's like, I want that trade. Put me up in between them. How you like that one?
That's kind of like the safety 1x2, right? It's I want my put for cheaper, but I don't want to take the risk of overshooting the target. that this is going to be more effective at that than some of the other things people have done.
Yeah, the problem is with this guy, obviously, if someone's putting up 100,000 close to it contracts, the strikes around it are all going to reflect that too. So you're not, just because you're choosing different strikes doesn't mean you're going to dodge those premiums in any way, shape, or form. You're still gonna be reflected. They're not gonna bid up one strike and then leave the strike next to it alone. That's not quite how it works. But I could see how you might be inspired to create your own version of this 1x2. Let us know. What do you guys always talk, buying puts out here in VXX, but do you like funkier ways to do that as well? Maybe with some of these 1x2s, does that float your boat out here? Again, these have to be a little bit deft. Once you start getting on the ratios, you have to be a little bit deft on the closing handle out there, on the closing button, to make sure you're closing things out pretty quickly. But mostly, as long as you're doing that, our friend here, even this week, he can maybe make the argument that he wasn't as deft as he needed to be. It wasn't as quick on the trigger as perhaps he should have been with this position. But again, he's got other things cooking. So if you're doing this, be cognizant of that. But other than that, not quite crazy. Let's go out here, some other products really quickly before we get to some of your questions. Let's see. Crude vol this week out in commodity space. We talked about it on TWIFO yesterday. I encourage you. It's already on the network, so check it out if you haven't already. We do a deep dive into crude. A lot of big metals there as well. I'm talking metals vol. Crude vol is, as quoted by our old friend OIV, a.k.a. the WTI VIX, about 35.5, so about 3.5 points higher than it was this time last week. It's been edging up here for a little while now, where we're seeing it just kind of keep creeping up. We talked about that again yesterday on Vol Views or semi-TWIFO, that we're seeing a bid to the puts in WTI, so no surprise as we continue to move down that we're seeing that vol come to life out here in crude land. Gold vol, kind of a bit of a different story. We've said that before too. So while crude vol has been edging up, it's substantially higher. It's about almost gold crude vol is about almost 7 handles higher now than it was a couple of weeks ago on the show. And gold vol, kind of a different story. It was off 1.5 points last week, and it's off another 0.75 points this week. Again, someone asked how we get our gold vol. I'm just quoting GVZ. That's the gold VIX out here, which is of course the VIX of the gold ETF, GLD. So we had about 11.5. It was about 12.25 last week. So gold vol has kind of been a different story. It catches a bid, then it immediately gets crippled, cut off at the knees there, and that's kind of what happened again this week. So gold vol, it's short-lived, these bursts. You got to live them and run with them and take it off just as quickly, otherwise you'll get caught up in the inevitable annihilation. Not a heck of a lot on, let's see, on the earnings front here for this week. You can check all the earnings move reports that we have on the old website, theoptionsinsider.com, listeners. The move reports, move results reports are always good, especially for this show, because they break down what actually happened here. And I'm looking here, not a lot of big names. Again, you can check them all on the website earlier this week for what was popping off. Speaking of popping off, it's time for you guys to do just that with a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Vol voicemail. Let's start things off by paying off some of the questions we like to ask you guys. Last week we asked you, what's your Vol weapon of choice? What do you like? What's your go-to when you're slinging some volatility in your portfolio? Do you like VIX options or futures, VXX options or the underlying there, the old TVIX or SPX/XPY options? We didn't even get into the underlying, just got pure options there, obviously. And overwhelmingly, about 50%, exactly half of you, saying you like SPX or SPY options. That's the way you trade your vol in your portfolio, which is interesting. Again, that speaks to the savvier nature, I think, of our audience out there. They go direct. They don't want no stinking formula telling them what their vol is. They want to go direct to the implied of the either the SPX or the SPY. So interesting stuff there. Number 2 is only 29% saying VIX options or futures. I thought that would be higher, quite frankly, because it kind of takes up all the oxygen in the room. But only 29%, 15% for the old VXX TVIX, a meager 6%. So you guys like slinging yourselves a little S&P vol, which is kind of interesting, directly No playing around with this vol complex. Forget about that. Let's do it ourselves. Speaking of doing it yourselves, how do you do it yourselves? We asked you this week. We like to take the pulse of our audience. We catch up a few times a year with different questions to see how you guys are your moods, how things are evolving out here. And this week we're catching up, taking your pulse on your favorite go-to strategery out here in the option space. I know we always say before everyone should have a multitude, an array of weapons in their arsenal when it comes to trading, and we definitely advocate for that. But people usually have some fallbacks that they like to rely on. If you look at your aggregate trades, some things usually pop up as being used more often than others. What is that strategy for you? What is your go-to? If you got a couple to choose from, you could probably going to go with this one. We gave you 4 choices. Again, there's an infinite number really out there. You could write in with your own. But the 4 choices we gave you were butterfly, or the covered call / short put. Again, if you don't know why that's on the same choice, then check out some of our educational content. It will do you wonders. The verticals, call or put, we don't judge. And the calendars / diagonals. Mr. Meatball, I don't think you had a chance to weigh in on this one yet. So first off, if you have a vote I know you like all different ones, but if there's a go-to you usually have that you find yourself doing more often than others, what is it? And then B, more importantly, what do you think our audience is voting for?
I find myself using kind of, especially with S&P vol, right? You're really using all kinds of different. If you're just limiting yourself, if you're trading the S&P 500 and SPY, and you are a one-dimensional person, then 80% of the time you are trying to force a square peg into a round hole. That being said, generally speaking, when if vol is low, I'm a calendar diagonally guy. When vol's higher, like it is now, you'll find me traveling in butterfly land.
I was gonna say, if I had to pick, I would pick butterfly for you. That seems like if you have a go-to, that usually seems to be the one that you're slinging the most. So I was gonna pick butterfly for you, and that sounds like I was right. And then what? That's you think our audience is picking too?
I'm thinking they're gonna go diagonal calendar-y thing.
Diagonals, interesting. That's the savvier. I thought that would be low because that's usually maybe an options 102 or even an options 103 type of trade. People understand how those calendars and especially diagonals tend to work. Right now, though, our audience is loving themselves some verticals. Love it. All week long, verticals have dominated this. I thought for sure it was an early surge, then it would kind of change. And I thought for sure covered call, short put would run away with it. Has not been the case at all. Verticals, 48% right now. We've got about a day or two left on this poll, but still holding strong at around half of the votes. So if you don't like that, you don't agree, or maybe you do agree, get on over to Add Options, make your voice heard. 48% right now. Verticals, call or put, a distant second for calendar / diagonals. This is not how I thought this was going to play out at all. Number three are covered call / short put, and taking up the rear, 13% are butterfly. So almost as many of you are saying percentage-wise do butterflies and covered as you do covered calls, and more of you do calendars and diagonals than you do short puts. I find that surprising. But again, verticals, we didn't specify direction, so that could, of course, be your short put vertical, your short call. That of course, covers a lot of things. You can only fit so much into 100-odd characters or so, whatever the lines are there. But still, surprising on every front. Speaking of surprising, some of your questions are always surprising. Let's get to some of them. Mina wants to know, she got a very straightforward question, but also a very detailed one. She wants to know, quite simply, why is VIX so weird? Well, we've been doing this show for many years now. I don't know if we've ever truly, if we cracked that nut of why is VIX. Mr. Meatball, I ask you plainly, sir, why is VIX so weird?
I mean, to be fair, it is. But, that's like saying why is the nerdy guy that gets straight A's weird, right? It's not weird if you're a, math geek. It's just weird if you're, a regular like me. So I would say that, esoteric is maybe the better term than weird.
Yeah, esoteric, definitely a good. But I get where she's coming from. For a lot of the normals out there, and even people who've been trading it for a long time, VIX is still a weird beast because it is. Look at the trajectory of it when it was created, when it was conceptualized. Way back, in the dark days of the Cboe. What was it? It was a much purer beast back then, right? It was straight up front month at the money OEX vol, aka the S&P 100. That's a pretty straightforward thing, and it wasn't tradable. It was just an index that was disseminated, kind of just an indicator. That's all it was. And so in that case, it wasn't as weird. I mean, maybe the underlying choice was weird, but the O was a bigger beast back then. But these days, they moved it to the S&P 500. That was a good thing. They added skew, and I've often argued that's a good thing too. Some people have argued against that now, hence all the myriad lawsuits against VIX as a result. But once you start adding things that are outside the straight up at the money implied, that's when things start to get a little weird, because things, obviously are going to move differently in those wings than just straight up implied. And now, of course, we have different futures they're incorporating in, the different weeklies, and there's kind of like a spectrum of futures that's getting rolled in and rolled out of there all the time. So that makes things weird on top of that as well. And then, of course, you have the VIX is a tradable complex now, options and futures. So tradable products going to have their own life. They're not just going to move in lockstep with what's going on in the implied and the underlying anymore. They're going to be kept close because there's an arb relationship there, but still, someone could be selling the futures and buying vol and vice versa, and they can move on their own a little bit. So that's going to make things weird as well. And then on top of that, you have all these other myriad things going on, like the crazy, funky opening quotation around settlement and all that other. So there's a lot of layers of abstraction that remove you from the base, straight up S&P volatility that it was used to be. And so that all those layers of abstraction, every one that you add on, it's kind of like an onion. You keep adding on the layers or a sandwich. And you get there at the end of it, you got a very weird sandwich. It can be tasty, it can be delicious, it can be profitable, but it's weird. I get you, Mina, why it's weird. So I don't know, Mr. Meatball, I'm with her. It's weird.
It's weird, but it's like I said, it's gamer weird, not, gonna touch your kids weird.
That might be the best analogy you've ever made on this show. VIX is gamer weird, not going to touch your kids weird. I hope whoever producer is listening to this right now, they tweet that out and credit you forthwith, because that is gold, sir. If we could fit all that into the title of the show, VIX isn't going to touch your kids. That would get all sorts of weird flags, I think, in the thing. Touch your kids. I don't know. I can't even go on now. I'm totally distracted. All right. I'm going to try to, though, because that's why I get the big bucks. All right. Touch your kids. Oh, here's one for you, Mr. Meatball. You can keep going on with your weird analogies. This comes from Holden. Holden wants to know, he says that Meatball guy says he gets paid to buy VXX puts. How? He's talking about your put buying palooza there of the Jan 10 puts, Mr. Meatball. You said you got rebates. Explain that process to Mr. Holden.
Yeah, so, there's this whole thing called payment for order flow. And certain exchanges are trying to garner order flow. And so, like the NASDAQ and C2, when they, in order to try and garner support, they want to garner views and garner business. They run what's called a maker-taker model. So what happens is that they pay for me posting order flow on the exchange. So I get a rebate if my order gets filled. So basically, the way their exchange works is I get paid, let's say, 40 cents, and the person who hits my bid pays 60 cents, and then they're able to arbitrage the difference. That's the entire foundation of their business model. And so that's all I'm doing is I'm using payment for order flow to my advantage. And, if you're not doing that, if I'm not doing that, then I'm doing my customers a huge disservice that are investing with me.
Yeah, I mean, this has obviously been a point of contention for many years. You and I have both argued that it's absurd that they, pay for these things, but that's the structure they've created. This was obviously a big point of contention in books like Flash Boys and others. But different venues are going to have different structures of how they do this kind of thing. And in this case, they look to pay to create its, maker-taker model effectively. If you're making liquidity, you're getting paid a rebate. If you're taking liquidity, you have to pay it. And so if you're savvy out there, you're going to try to arb that model to your and your client's advantage. And that's kind of what he's doing out here. AA3 wants to know, why is there no VIX on SPY? Well, that's a loaded question in and of itself. The short answer is that, Cboe obviously has the SPX license, so they create the product for the things that they control. SPY is a multiple listed thing, so they're not going to do that because that trades on everything. But the longer answer to that is, of course, if you listen to our show we just did a week or two ago, the MIAX guys were in here for FIA. And if you haven't missed it, check out our Option Insider Radio link page. You'll see the shows there. Look for the one with the guys from MIAX, a.k.a. the Miami Options Exchange, because people are trying to do effectively what you're talking about, and they've created a new product. It was originally with bats, then Cboe bought bats and killed it, go figure. MIAX picked up the license with these guys called T3, and they have created what is functionally an equivalent of VIX on SPY. And it's just got SEC approval, so it's a real thing now. It's a big boy. And the one question mark that still remains is, what are they going to do for an underlying? Because obviously, a basket of SPY is not an ideal way to hedge your volatility instrument. Right now, it's kind of the only way. You could do the VIX futures against it, but it's not quite a one-to-one arb, so there's going to be a little bit of weirdness, to use the earlier quote, going on there. But there is an SEC-approved, what is functionally equivalent to VIX on SPY. It's just a question of the underlying. But we should be seeing this thing sometime soon. I know, Mark, in the past, you've taken a dim view of the Spikes product, but now it's a real boy. It's been approved. What are your thoughts on it, sir?
I mean, it's redundancy is what it is. I think it could work. There's no difference. These Spikes and VIX, if they're basically calculated the same way, are going to correlate to each other 99%. If they're where they don't correlate to each other is where there's going to be small variances in how one calculates versus the other. I just don't see, there is a use case for one. Why not a use case for two? There isn't an underlying. I mean, their argument, the interesting thing is, their argument is going to be you should use VIX futures to hedge spikes. And that's, so why bother then? The only reason but again, there is a place, just like there's a VIX and VXX, and SPY options and SPX options. Why not? Why not?
Well, you get it. You get it from an exchange perspective, right? That gives them a proprietary product that they own now in the vol space. It gets them also to drive volume on SPY, which is a product they can trade. SPX they can't trade. So there's a lot of reasons for the exchange business model to do this, and also they have advocated that they think at least they've solved the SPX kind of quote-unquote manipulation issue where those puts are obviously causing all those issues around the settlement. They've created effectively what they call a dragging system that will allow that to effectively not be the same issue in the spike. So if you're concerned about that skew causing undue changes to the settlement procedure, then maybe spike's interesting. Well, I was just informed by our producers that interview is not live yet, so stay tuned for it on the network. It'll be hitting it soon. It's a good conversation I have with those guys, so stay tuned for that one. Listeners here, let's see, we got time for one more. This one's long. Let's not do that one. Let's see here. This is kind of a similar theme to the last one, so let's keep on this one. This comes from BD3. He wants to know, why no NASDAQ VIX futures? Why no not? Why no options? Why can't I trade VIX on NASDAQ? Well, what he's alluding to, of course, is there is VXN. That is the NASDAQ VIX. So it exists. It's disseminated. As we're speaking right now, it's at about a 25, up about 2.25 handles, or cover your ears, percent of percent haters, about almost 10% on the day. But still, so it does exist. It is disseminated, but you're right. It's not optionable. It's not really tradable. This has kind of been an issue for a while. People have asked this a few times. I don't know the exact reason why they haven't listed it, but they've done this before in the past. They've listed other volatility indexes. They had the RVX, which we all love, the Russell 2000 VIX, and then they kind of delisted it because the market makers really weren't stepping up in there, so the markets were kind of wide, and they also weren't getting a lot of paper. So the paper would come in fits and starts. They'd get a 500 or 1,000 lot, then it would kind of sit empty the rest of the week. I'd imagine it's a similar scenario in VXN land, where the market makers aren't really super giddy about quoting it, and there's not a lot of, potential paper that they foresee, so they have not listed it. I don't know, Mr. Meatball, have you heard any behind-the-scenes scuttlebutt about why there's no real options on VXX, or VXN, I should say?
You recall they did. They had VXN options and VXN futures, and nobody traded them.
Yeah, that's true. They did list them, yeah. It was in the same time as RVX.
it's your fault that there's no VXN because you didn't trade it when you had it. You know, it's you tore down paradise and put in a parking lot.
Yes. You're right. I forgot that was listed. I remember RVX, but I forgot VXN was optionable too at the time. So yeah, they did exist actually. So that's even better. So in which case, yeah, it's all your fault. What's your name? BD3. It's all on you, sir or madam. You're not doing your 10 lots there is what killed it. But yeah, we saw this play out with these products earlier. For whatever reason, the market makers weren't super inclined to really make them tight because there wasn't a lot of paper. It's kind of that weird chicken and egg. There's no paper because the markets are wide, but the markets are wide because there's no paper. So someone's got to blink first. In the case of those products, unfortunately, no one blinked. I guess NASDAQ hasn't been super motivated to get them back up there, whoever has that license now. I know the Russell folks, FTSE Russell, we have them on twice every week. They're super gung-ho. I tease them every week about RVX. So they're super gung-ho to bring back RVX. So if you're looking for a non-S&P 500 volatility index that has tradable options on it, RVX may be coming back sometime in the near future. Hopefully this time you guys trade it because I'm pushing for it a lot now. If you guys don't trade it, I'm going to look like a fool. But c'est la vie. I haven't heard, unfortunately, any news of a resurgence, a Lazarus-like resurrection of VXN, but fingers crossed. You never know. All right, let's keep on rolling to our final segment. It is time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball. This is a difficult segment, as many of our guests have learned coming on this show. In fact, I think Dave Lincoln is listening now. He was on the show. He was celebrating his victory a couple of weeks ago, Mr. Meatball, but I had to sadly inform him that if it's like 2 handles off, it's technically the closest, but it's not quite a victory. We have to be demand precision here on the crystal ball, and that includes us. If we don't get there either, we don't claim a victory. So if we're outside of a handle or change or so, certainly 2 handles, then it definitely doesn't count. Well, so but he's listening today. He says, "Great show, thank you, Mr. Lincoln." Right back at you. It was a good guess. You were close, certainly closer than us. So you get the brass ring that week, even though it doesn't really count, unfortunately, as an official victory. Also, Mark Brandt chiming in saying, "Thinks VIX may pop next week." Maybe we shall see. On what did you say? VIX could blow next week. Maybe. I don't know. I'm not really pricing that in. But again, if we get more of this kind of action off 2% every day, that could change. We're not like saying we were talking about it earlier that the futures weren't really pricing in the super backwardation coming into showtime here, so they're not really putting that in. Maybe if that gets steeper, that could change. All right, but all that's a long way around as to let's see where we are right now in VIX Cash land. VIX Cash 1784. It's about 1785. So that means I am the winner chicken dinner. I'm off about half a handle. Oh, if I hadn't ticked myself up another 0.3 or so, I would have been almost exactly bullseye. C'est la vie. I still win though. With about a half of a point. Mr. Meatball off by about 1.3 handles here. So you're fading. Looked good until it didn't, Mr. Meatball. Again, that's the challenge of this. I've had many times where it's touched my level on Wednesday and then bounced right off of it or fallen right off of it. So that's the challenge. That's the difficult dance that is the crystal ball. All that a long way around to buy myself some time. I get to go first this week because I win, quote unquote. Pretty close, not a bullseye, but not bad. Let's see. So we're at about 1785 right now in VIX Cash land. Markets are selling off fairly aggressively. VIX is not super poppy, to use a technical term, out here. So if this persists, obviously all things could be off. But I'm not feeling a persistence. I'm not feeling a persistence at all. I'm feeling a little bit more of the old erosionator. I was 1835. Last week I was feeling really 1815. I'm going to go a little bit shy of that for next week, which would kind of almost be in line with where we are this week, a little bit shy of where we are right now. I'm going to say 1765 this time next week. Mr. Meatball, if you're still feeling you're fading, I've left a lot of room for you on the downside, sir. What are you feeling? Are you feeling a pop next week?
You really did. What did I guess last week?
16 and a half, sir.
I'm going to guess 1649.
the deep analysis that goes into the Meatball picks here on the old crystal ball. No wonder why you're lagging so far behind me, sir, in the rankings here on the old crystal ball segment. By the way, listeners, if you guys have your picks, hit us up. You guys have done so. We've had some listeners win recently. They were much better than us, so go figure. So if you guys have your salient picks, hit us up. Again, this is for end of show next, so not close of day on Friday. That's what makes it so hard. It's 1 o'clock Central on next Friday. That's where you have to guess. So get your picks in. We'll tweet it out as well, saying, hey, if you got your picks, put them in. But yeah, I'm at 1765 for next week. Mr. Meatball still feeling the fade. I would not be angry at all if he's right. 16.49 there. What's your pick? Some of you in the chat sound like you're feeling a VIX pop. What's that level? Let us know. Some of you sound like you're feeling more fadey, super fadey perhaps. Let us know. Or maybe you're feeling right around here, which is kind of where I am. Then let us know in the chat. Let us know on Twitter. Let us know however you want. Get your vote in before next week, preferably by like Monday or Tuesday. Otherwise, you wait till like Thursday. It's kind of like cheating. But say lobby. We'll be nice and let you do it. But that music means we're done. Unfortunately, listeners, what a fun show it was today with some good analogies from the Meatball. What was that one again? Weird, nerd weird, but not touch your kids weird.
It's gamer weird. It's gamer weird. Not touching it touches your child weird.
That was good stuff. That was a pearl. That was a pearl of wisdom, Mr. Meatball. If I want more pearls of wisdom just like that, sir, with perhaps maybe a little bit of VIX thrown in, where should I go? What should I do?
Yeah, if you want this kind of smart analysis managing your money, and you're a qualified investor, reach out to me, Mark at Carmeline Capital, and I'll tell you about our smarter way to trade the S&P 500. And, if you want to learn how to actually trade for yourself, then optionpit.com is the experts on VIX education.
I got to figure out a way to put that in the title without like offending all of the platform holders. But it's good. I like it. That's a pearl. That's a pearl. That's a gem. Listeners, if you want more gems like that, optionpit.com is the place to go. And on behalf of the Greases Meatballs, let's even throw the Rock Lobster in there, and all of our recent guests, Dave, all those people, on behalf of all of them, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for joining us live, for sending in such great questions, short, long, all in between. We love them all. Keep them coming. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.